Hello everyone and welcome to my Wealth Odyssey. This is the portfolio update for November 2025. My goal is to start as a small investor and grow my portfolio so I can achieve financial freedom. I'm doing this by working towards a few clear goals, starting with building a long-term investment portfolio. Last month as well, I also began my premium bonds journey. I started with nothing at the beginning of 2025 and made my first deposit into my stocks and shares ISA in April, which forms the foundation of my long-term investing plan. This channel is all about documenting my journey to the million, including all the highs, lows and lessons along the way. And certainly in November, there were a lot of lessons. Absolutely insane, guys. But before I show you where my portfolio is up to, let's take a quick look at where we ended at the end of October 2025. So you can see on screen that we ended the month with a closing balance of £19,954.44. And that was my second month in a row where my monthly profit outside of my contributions from my salaried job of over £3,500 for the last 2 months. Absolutely incredible. So that meant at the end of October, the actual portfolio profit was £8,704.44, which is not too shabby at all considering I've invested £11,250 during the course of the year. So at the beginning of November, I managed to add £2,500 to my portfolio, far exceeding the £500 minimum that I want to add each month to this stocks and shares ISA. And I know in the future those contributions will drop down to a little bit more of a sustainable level. I'm just on an absolute tear at the moment to save as much money as possible and focus on this early stage of my investing journey. Let's have a look at the comings and goings within the portfolio during the actual month. You'll see that the table has slightly changed from my previous videos, and that is because for my 3 main quantum plays, I have now sold out from my initial positions, letting the free money ride. Now, why am I doing that? Well, I was given a little bit of advice recently to have a look at the Dow Jones Index, and we are very much at the top of the channel, so we are due a correction. And I didn't heed that advice initially, and that was to my own detriment. I really wanted to take a few more gains from the market before I sold out from my initial positions and let the free money ride. So invariably, the market did come down, and I was ruining that decision for 4 or 5 days as the Dow Jones dropped and also the quantum stocks started to drop as well. So after about 3 or 4 days of downward pressure, I decided to sell my initials from the 3 plays, D-Wave, IonQ and Rigetti. And that means that all the profits that I have in those 3 stocks are free money, are house money. So that's fantastic to be in that position, to know that I can now let these stocks run, and I'm planning to let them run for 3, 4, 5 years, absolutely. And who knows where they go from there, but now I've freed up that capital to invest in other plays when the stock market gives me that opportunity. So what I've learned from this whole situation is that I clearly need to have some better rules and discipline in terms of my trading. So I've sold my initials in those 3 stocks and I'm going to let that money now ride. Rigetti actually is a 2x, D-Wave was almost a 2x, and IonQ was around about 50%, I believe. Arkit, no additions to my £1,000 entry at this moment, and I added a small amount to Inflection, which is another neutral atom quantum play of £250, bringing my total holdings to £500. I added a further £500 to Rich Tech Robotics. That was to essentially bring down my average, and I want to slowly dollar cost average into this stock. And finally, I decided to sell out of my Bitfarms position. Now, the reason why I did that was because of the US government shutdown. So I sold out of my position. I actually added £500 in the early part of the month to bring my average down. And then when I was slightly in profits, I managed to sell the whole position. Now, why did I do that? Well, during the month, there was the government shutdown in the US, and I just felt that the market was a little bit overextended. So I thought to myself, do you know what? Let's sell out of the position completely. I still very much believe in Bitfarms as a company, and I think they'll do well in the future, but I just feel that more favourable conditions are needed, and I think I've made a solid play there because the stock has continued to fall during the month after I've sold out, so another small win for me there. So there we go, lots of movement during the actual month. So now at the end of the month, I have invested £2,750 currently in the market, plus I had that free money from my 3 quantum plays, and I have a cash balance of £11,000. So when the markets do turn around, I've got cash at my disposal to take advantage of that situation. Now, I will just add that nothing I say in this video is financial advice. It's just what I'm doing and is for entertainment purposes. I'm not a financial advisor and your capital is at risk with any investment, so please do your own research. It's clear that my risk tolerance is a little bit higher in the early days of my portfolio instead of investing in solid ETFs and huge companies like Nvidia and Apple. However, I'm hoping that my risk tolerance will actually decrease as my portfolio increases. And as you can see, that is happening with my free money plays now for my 3 quantum stocks. So when talking about my portfolio, I said there that I sold out a little bit too late when the market clearly was telling me that I should be taking some money off the table in the stock market. And what I realised is that I need to have better discipline within the market now that my portfolio is growing to a bigger size. I've been doing a ton of research and been reading books to further my knowledge around the actual markets and market discipline from the top traders around. So the latest book that I'm reading, and I might actually do a separate video on this in the future, maybe a book club series, but I'm reading currently, or I've just finished reading, Trading in the Zone by Mark Douglas, and I found that book incredible. I was listening to the audiobook, going for my long runs and things like that, and the stark realization that trading is primarily a psychological challenge rather than a technical one just absolutely floored me. It was a really, really interesting read from a guy that's been there and done it, and I want to learn from the best. So essentially the book kind of emphasises that traders must accept uncertainty and kind of think in probabilities and detach emotionally from their individual trades. It's all about discipline and consistency and having a well-defined trading plan rather than actually having the most perfect strategy where you buy at the bottom and you sell at the top. So it's really about developing a mindset based upon those principles and emotional control. And I know in the past that that can be very tricky. I've certainly made some poor decisions in the past, but reading the book has made me realise that I don't have my risk tolerance and plan written down. For example, how much you put on in a trade, how much you're willing to lose and cut any losing trade, etc., etc. So I think from what I've read from this book and other books recently, over the Christmas period, I really want to sit down and think about this and the bigger picture. I think my strategy in terms of just trying to pick stocks at the moment and do the research is good and valid. However, I really need to define my risk strategy and really take any emotion out of it. I'm learning that quite quickly, but I think it will make me a better trader in the future if I really have clear guardrails in terms of how I approach my trading journey and my long-term investments. Now, all the investments that you see on screen, I believe in them in the long term. So these are long-term plays. However, how can I identify the best opportunities in the future? And how will I control those emotions? For example, if, let's just say, a best case scenario, a stock goes on to make a 5x, a 500% gain, when will I take profits? How much will I take? For example, selling my initials now on those 3 quantum plays, psychologically, I feel so much lighter. I can now put up with the big swings to the downsides and upsides with those 3 stocks in the future because this is now house money. And what's great is I've got cash on the side now to actually invest into other plays as well, solid plays. So yeah, so just a little bit of a tangent there, guys, but I think it's really important to discuss this. And what are your guardrails? What are your trading plans in terms of managing your emotions and your risk tolerance and taking profits, for example? So all of these things are really, really crucial, and I'm kind of joining the dots between different books. So yeah, over Christmas, I'm going to consider this a lot more closely. And I'm actually going to write these down, and maybe I'll even present them in a video, but I'm going to have those written down and I'm going to adhere to them in 2026 and going forwards. So as you can see on the screen, guys, so these are my current positions and my average prices. The bottom three stocks are the quantum ones that are now free money. So there's around about £3,800 worth of free money in those stocks, and I'm more than happy to keep those for the coming years. The three stocks that I'm actively invested in at the moment are Inflection, which is currently listed as Churchill Capital until the SPAC goes through, Rich Tech and Arkit, and you can see I'm in a negative for all of those three stock positions. Okay, so let's now have a look at the final result for November 2025. I actually finished a month with a portfolio balance of £17,229.32. Now that means that I have a monthly loss of £4,700, which is huge, guys. I'm not going to deny that at all, but yeah, we were overextended, and these kind of growth AI quantum stocks, they took a battering, but also they have been on an absolute tear this year. I mean, most of them have been up 4 or 5x, so it is quite expected, and it might be a rough few months coming up as well in 2026 for those. So we'll just have to wait and see how that turns out. So that means that my portfolio's profit is sitting at around about £4,000, you see there in the final column, since I first started, which is a fantastic return overall. Okay, so let's have a look at my investing journey graph. You'll see there at the bottom, that's the red line, and that shows £500 saving per month, with the blue line the potential expected return from the portfolio. The orange line is my actual saving journey, and I have been saving lots of money this year, so which is fantastic at the start of my journey. So that's well above where I should be at this moment. So the green total profit line now comes down after that big loss this month towards my orange invested line. But hopefully that will stay above the orange line forevermore. But again, nothing is guaranteed in investing, and I'm here for the long term. So let's just see how things perform, and we keep moving forward. Now let's just have a look at my investing journey overall. You can see here that I've made some fantastic gains since I've started investing in April, and that spike where I almost got to 24,000. Now we're hovering just around the 19,000, but you can really see the appreciation in the portfolio. So this is just a fun table showing the stocks and shares ISA balance distribution holders in the UK. It's just estimates, but at the end of the last month, we were in the £15,000 to £20,000 row. And after the month that was, with a closing balance of £17,229, we remain in that row. So let's just hope that in 2026, things are kind and we continue to go up the bands in terms of portfolio value. Wouldn't it be great to actually hit the £30,000 mark in the coming months? But again, we'll just wait and see how that turns out. So yes, a very difficult but expected month this month in terms of a pullback in stocks, given the government shutdown and the uncertainty around returns using AI, etc., from the biggest companies, which had a bigger effect on the smaller companies as well. I hope your portfolios are holding up okay in this current climate, and thanks very much for watching. So can we have a strong end to 2025 and my first calendar year of investing? Yeah, of course we can. Cheers guys, dig a dagger.